everyone, welcome to the Grow Your Future podcast. I am your host, Zah and I'm joined by the Lebanese cucumber,
in green
Sam
fitting.
Eljaban.
I wore the correct shirt today. We'll have to wear the eggplant and cucumber.
I always get confused which cucumbers I've got to buy when I go to the supermarket. Lebanese or continental? Which one? What's the difference?
I've always bought Lebo. I have no idea, mate.
Because you are a Lebo,
Yeah,
you know?
well, can't go against that. No, I think the what are the other one? Continental.
Yeah.
Where are they from?
I have no idea. Anyway, how you been?
Yeah, good, man. I'm ducking and weaving COVID that's hanging around here.
Yeah.
It's keeping me fit, man.
Yeah.
What about you?
Mate, I've been living a balanced lifestyle lately.
In what way?
I think a bit too balanced, you know. I've put on a little bit of weight. I've just been like eating whatever I want. I've just been enjoying life a little bit more, you know. I've been leaving work a little bit early.
That's unusual.
It is unusual for me, but I've enjoyed it, you know. I've been, you know, spending a lot more time by myself and with my wife, and it's been good. But I've been getting into this Lindt chocolate lately.
Oh.
Like all types of Lindt chocolate, dark, milk chocolate, hazelnut, caramel.
Why? Where did this come from?
Okay,
What happened?
What's happened, right, is Cadbury, right?
Yeah.
Good old Cadbury. And I used to love plain Cadbury chocolate. Now, good old Cadbury have changed their ingredients after like 100 years or something like that. I never knew this until we Googled it the other day. And they've changed it because they say they've put a more sort of health conscious product. They've substituted something.
They took all the good stuff out.
But I think they've done it because they wanted to cut costs, right? Yeah. Now, we're still paying the same price, if not more, for Cadbury, but it doesn't taste as good as it used to. So what happened was, psychologically, I'm like, okay, Cadbury's no good anymore, and now I've been smashing Lindt. And now I'm fat, right? That's the result from it.
Well, you will get back into shape, mate. It's all good.
But isn't it interesting, Sam, you know, when we were kids, Freddo frogs were massive. Have you had a Freddo frog lately?
Yeah, but I have another theory about this. I know what you're going to say, but is it not because our hands got bigger that they've shrunk?
That too.
Could be.
That too. But look, they are small now.
They are now.
And I think it's part of inflation, right? Things are going up in price, but things are decreasing in size, right? Like it's everything. You know, you go to Macca's, the burgers are smaller. It's a way of inflation. It's crazy, isn't it?
The problem is, everyone, capitalist nation, right? Capitalist economy. What is it based on? It's based on profit. So everyone's trying to make profit, and if you can't maybe say raise prices, which might deter people from buying it, they might give you less for the same amount of price. So that is a inflationary thing as well. Yeah.
So if you need to assess how the economy is tracking, go out and buy a Freddo frog.
Or some chips. You know, you buy the chips
but
and
be warned, you'll start smashing all the Lindt chocolate and then you'll end up like me, brown and fat.
Then you need to renew your gym membership. Go back to the gym.
The reason why we talk about inflation, because we're bringing it back to property now, is that property always goes up in value. You know, if we look at you know, the last 100 years of property prices, they've always inflated. So it's not just chocolate that inflates and decreases in size.
Yep.
Right?
True.
So like properties, for example, block sizes, it used to be normal to have a 1,000 square metre block, right? Now, just like the Freddo frog, a standard block is like 300-400 squares.
Yeah.
Right? And it's only getting smaller. We're finding blocks as small as 180 squares.
Yeah.
Same with apartments. They're shrinking, but they're more expensive.
Yeah.
Right? Construction costs are rising. So what we're going to talk about today is 10 reasons why property will always go up. Because we've always got these people who are saying, oh, it's, you know, can't go up anymore. It's going to crash 50%. It's going to collapse. But in the last 100, 200 years, it's never collapsed. It's never crashed. I mean, it has corrected, but it's always generally gone up in value, hasn't it?
Yeah. No, and these 10 points we'll go through will explain exactly why.
Well, there's a variety of reasons, Sam. Like a lot of people just think, oh, it goes up because, you know, the supply and demand, or just because of the location. There is so many things, right? So let's start with number one, which is probably one of the most important, obvious ones, Sam.
Population growth. So it's sort of self-explanatory. If there's more people in a country, they need to live somewhere. And what we're talking about with property, it's not a want. It's not something you want. It's not fancy shoes. It's not a nice car. It's something you actually need. So when you're looking at it from that point of view, everyone needs to live somewhere. You have to live somewhere. Whether it's you're buying or you're renting, you need a house, you need a roof over your head. So on that basis of being a need, if the population is growing, all of these new people that are needing houses are going to demand more housing. And if there's not enough supply of the housing, that'll increase the prices over time.
You know what's funny when you just said it's a need, right? Like everybody needs a roof over their head. Before, when I first started in business, I thought to myself, okay, I need to be involved in a vehicle or which has some sort of commodity that can give me the greatest return. And the way I thought of it was, the biggest thing that someone would ever buy or invest in is the roof over their heads, right? Like the property it's the biggest item that you can leverage. It's the biggest purchase that anyone would generally make. So I thought, you know what? I'm going to be a part of that. Now, if you throw population growth into the mix, right, it's only just going to grow more. Sure. So the ABS has projected that in 2066, so how long is that from
About 40 years.
About 40 years, right? The Australian population is going to be around 50 million people, which is double.
So that's going to be about the time we're retiring, right? Hopefully, or hopefully beforehand. But at the time we're slowing down, we're going to have a population of nearly double.
Double.
Now. And they're all going to need a house. They're all going to need to live somewhere. And that's going to be a driver of these prices going up continually. And
the Australian property market is actually quite lucrative if you think about us on an international scale, right? We are the lucky country where everybody wants to live here. We are not overpopulated. We're actually underpopulated. We have, a safe and stable government. We have a great lifestyle here. It's generally quite safe, right? So everyone from all over the world wants to live here. Yeah. And I guess one of the most important things to consider is we're a very immature country. And we've talked about this on the podcast before, where, Australia is in its infancy stage of growth, which means there's that room for growth. Now, a lot of people want to be a part of a developing nation, right, that's going to go from here to here, because all of a sudden, if you're part of that, then you get to reap the benefits of what that country has to offer. Now, if that country is, overdeveloped and very mature and there's no more room for growth, then I guess sentiment would be quite subdued. So being in Australia, where we've only got about 26 million people now, looking at the next 40, 50 years, property is only going to go one way.
What you're saying, there's still opportunity here. So it's not like New York and London where you can't buy, you can't move there, all that kind of thing. So Australia still has that affordability thing.
Well, it's hard to make money.
Yeah.
It's hard, like generally speaking, if you're an individual and you live in those mature, developed countries or cities, it's very hard to make money. Like I've got a friend he's a builder and he's from England. I'm not too sure what part of England. But he's got his own business here. And he said to me, he goes, if I had my own business in England, I wouldn't be making the money that I make here. He goes, the opportunity here is just amazing. Yeah. Right?
Yeah. And it's funny, Australia has always been that attractive place. And the government knows that really as a nation here, we don't multiply like other, say, cultures do in other nations. We don't have 5, 10 kids that are growing the population. We actually need to bring people in. So they've done it throughout history, all the... snowy hydro schemes and all these big infrastructure plans and builds. We had people come from overseas to help build that because we don't have enough manpower and we don't have enough population to help grow. So over time, and what this study is showing is that there's going to be a lot more foreign people coming here because we're actually not producing enough people. in Australia.
And in return, what we do is we give them residency, right? Which is the ultimate commodity here in Australia. And Australia knows that. And that's why we say, right now there's no immigration. Yeah, prices are still going up, but there's no immigration. Imagine when there is migration, there is, that they've opened up the floodgates for people to come through. And these people are wealthy people, like they're educated, they're skilled, they're bringing a lot of value to this economy, and they're going to pay a lot of tax. Yeah. And, the government wants that.
A good fact here is, I looked up ABS as well, 30% of Australians right now were born overseas. So if we got how many, 26 million? 30% is like 7 million people were actually born overseas. So that just shows you how appealing Australia is and how much more people going to come here, even after COVID, because we were quite good with it. There's going to be a lot more people coming here. And what that means is that population growth outside of the internal organic growth from Aussies ourselves is going to really put a demand on property.
Yeah, so it's only going to go up. That's number one. Number two is inflation, and this is exactly what we were talking about with the cost of chocolate and McDonald's and all of that sort of stuff going up. But property will always go up because of inflation. The same thing as devaluing of currency. So I think a lot of people they think of property prices being expensive, but the way they've actually got to look at it is that the price of currency is actually devaluing, and that's what's pushing the actual price up.
Yeah, so inflation has sort of two components to it. You got like the cost increases, like materials and things like that, but you also have increased money supply. So it's getting into the economics side of things, which is pretty technical, but just basically what it's meaning is there's more cash in the economy. When there's more supply of something, the actual value of it will drop. So what you're seeing is your money just becoming less valuable, so you need more of it to buy a certain amount of stuff. You can see with our parents when they bought properties, their salaries wouldn't have been what our salaries are. So our salaries have gone up because of the devaluing of our dollar as well. So for example, my parents might have bought a property for 100 grand. Back in the day, he was on say 10 grand, 15 grand a year. So it's all relative. But now, his property is worth, say, $800,000. So inflation and the devaluing of your dollar is always going to occur. It's actually done on purpose. The RBA have a standard rate of inflation they try to achieve.
And what is that rate, Sam?
They write it's 2.5. They're always targeting a 2.5 because they really want.
Which is bullshit.
Which is bullshit, and so they manipulate the type of calculations they use to produce that 2.5. But it's a very unknown time now. The inflation is per commentators in the economy is quite high.
Yeah, so they're talking about hyperinflation where things are going to really, really skyrocket in value or in price, right? And I think if you're in assets, you're going to win, but if you're not, you're going to lose, right? Because the price of your dollars in your bank account or under your mattress or wherever you've got it is diminishing in value over time. And if you're invested in assets like bricks and mortar, it could even be gold and all of that sort of thing, they're going to inflate in price.
That's right. So cash is really not a good place to have your wealth right now.
So just on inflation, they call it the hidden tax that the government don't want to call it the hidden tax, right? Where I call it that. It's a hidden tax. But what the government do is they borrow a lot of money to write all of these checks, right? To basically produce all of this stimulus. If the government are doing that, then it's probably a good idea that you do it yourself as well, for good debt, right? Because if we borrow money in today's dollars, but we don't have to pay it back in, say, 30 years' time, that debt is, what's it going to be worth? Pretty much nothing.
It's dropped. So you got two things again there. So you got the property going up its value with inflation, but you also have the debt that you locked it in at being paid down with dollars in the future that are worth less. It's very complicated, that second part, but what it effectively means is, you can inflate away debt on your own accord, just like the government does.
Well, let's take it back to your parents' property, right? They would have got maybe let's just call it a $60,000 mortgage on their property when they first bought it. If they held that mortgage today at still $60,000, it's not that much money.
It's a good example because the 60K is still there, but the property is now worth 800 to $1 million. But if they're still working, they're on 80 grand now instead of 15. So they're able to pay it down more than they could have previously.
And going back to the original topic of this podcast, right? How that will always push up property prices is that everybody will do it.
That's right.
Do you know what I mean? Everybody knows that, the greatest wealth builder is if it's not an investment property, it's your home, right? Which will always inflate in value.
That was the standard approach. So everyone was like, home is your wealth, which is open to discussion, but everyone has a fixation on property. So it's always going to be there.
Well, the Great Australian Dream, right? For us, the Great Australian Dream is the 10-year acquisition strategy. That's the new Great Australian Dream. But the Great Australian Dream originally was buy a quarter-acre block, build a home, get a 30-year mortgage, pay down that mortgage, own that home outright, and then that home will obviously be worth a lot of money at the end of your lifetime. That was the original strategy. And even though we don't really agree with that strategy now because times have changed, but the reason why that strategy was put in place was because property went up. Property went up in value, and if you weren't going to invest in cash flow properties, invest in your home. We still say that. If people don't want to invest in property, at least buy the home that you're going to live in. At least do that. Build some wealth that way.
That's right. Because it's not a bad thing. It's just not maybe the most effective way to do it. That's all.
Let's move on. Number 3, location.
What's your top fundamental?
Yeah.
Your top fundamental.
Location.
And reason being is it's vitally important for any type of growth in property and when picking your investments. So when you're helping a client identify a suitable property to invest their money in, how do you go about identifying, say, a good location?
Look, we identify weekly family incomes. We like to look at the suburb score. But we've also got to take into account that there are locations that are probably less desirable, but in the future will become more desirable because as the population increases, like a lot of these people that are affluent and aspirational will need to go to these areas that will eventually gentrify and sort of go up in value. So I guess this third reason of why property will go up in value in terms of location just means like it's the land that's going to increase in value because they're not making any more land. So for us, yes, we want to be getting the best pockets of land, but generally speaking, all locations pretty much rise in value over time. We're talking over time. Yeah.
And when we look at, say, population growing, if you can't go up, you have to go sideways, and it's just going to create a larger city. And if you're closer to the city, generally you're going to have a higher valued property. So I think the location side of things is going to have a massive role in the growth.
Number 4, when I started getting into property investing at a young age, I didn't really understand this one that much. But now, getting older and having a lot of friends who have kids that go to school and all of that sort of thing, school catchments.
Yeah.
It's
I never even thought about it before.
Yeah, because we don't have kids, right? But it makes sense.
Yeah.
If you want your kids to go to a specific school, which usually they're in the more affluent areas, you're going to fight to spend more money in those locations.
Yeah.
Especially if there's a government-funded school, which is considered a great school, and you want to be in that catchment, right? Like, because your kids are only going to be able to go to that school, generally speaking, if you live in that suburb or location. So I know, for example, there's a suburb in South Brisbane where there's this one of Southeast Queensland's #1 schools, but it's a public school, right? Yep. So that location just keeps going up in value because people are like, okay, well, I'd rather spend more money on my property or the land or whatever it is that they're buying, or pay more rent, whatever it is, to be in that suburb because I know that I can send my kids for free, right, to the public school just down the road, right, or the high school just down the road. So it plays a really critical part. That's only one example. They're all over the country. So people are going to fight to be in those suburbs, which will just keep pushing prices.
Creates demand. I did some research. I found, so in New South Wales, there were 3 suburbs that had experienced price growth purely because of their catchment area and the schools in that catchment, and they were Epping, Willoughby for Willoughby Girls High School, and Ryde. So all those areas, they've actually related property price growth to the catchment and demand for those schools. So it's an actual thing.
Yeah.
It's a big thing.
Yeah.
I had another quick funny story is, I have a friend that owns, the parents own a property in Tempe, and they had a family, not a family friend, like an acquaintance. They wanted to use the Tempe address of my friend's parents for their child to get into the school in Tempe, because Tempe has some sort of language, a great language school, and they wanted their kid to be fluent in languages. So they were trying to offer money or something to use the address of my friend's parents so that their kid could get into that school. So it's actually a really big driver.
Yeah, so there's a black market demand there, right, for the use of addresses.
I don't know if they got the price they wanted. I don't know what happened.
There's a new business venture for you, Sam.
ATO won't know about that one. Mate.
But it's really funny because this property we just we done a project in Melbourne in a suburb called Essendon, and we had to do some research on the schools in the area, and apparently the schools in the Essendon precinct are some of the best in Melbourne.
Oh wow!
And it just made that investment so much more attractive. So we know that area is always going to rise in value.
And going back to just quickly on property, if we're trying to identify places where people want to buy, because that's going to increase our value of the property, and homeowners are generally the guys that are going to pay more for a property, it would make sense to maybe buy in these catchment areas, because you're going to have families trying to buy their home, and they're the ones that are going to spend more money to be in those locations than maybe investors, where investors park money.
That's right. So we call it owner-occupier appeal, right? Yeah. And a lot of people get caught up in investing and go, I just want an investment and I don't care about it. Yeah. But what they want to buy, an investment that is desirable by an owner-occupier, because owner-occupiers are very emotional, right? They'll pay overs. I know, for example, for me, if I had to go and buy anything that was for me, for my personal use, I'm someone who, can actually spend the money. I'll spend overs. You know what I mean? Because at the end of the day, I don't care. It's for me, right? Yeah. So there's a difference between having that purely just an investor mindset to that owner-occupier.
So if you have an investment property in those areas where people want to buy and live, then you're going to do quite well, I think.
Back to supply and demand, right? There's usually a tight supply of that product. Hence the reason why places like Essendon, Bondi, those prestigious suburbs with limited amounts of land, these homeowners are just spending so much money, and it's just pushing prices up. Number 5.
Infrastructure. Massive one. And you know what really, what the government's doing when they're doing infrastructure plans is they're trying to create jobs. So they're trying to create jobs, they're borrowing money to do these big infrastructure builds, and that's going to really increase the value of the properties in the area, because increased infrastructure has more appealing aspects to it for people. So really, if you want an indication of where maybe prices might grow, you look at where governments are spending money, bigger businesses are spending money, like Woolies, where they're putting their money and infrastructure in. So they've done the research. They know where there's going to be.
So it's not just government.
Not just government.
Right? No. It's private as well. It's that private sector who are driving that sort of infrastructure system or infrastructure growth, right? So for our listeners who don't really know what infrastructure is, Sam, what are some of those amenities that can appeal to, say, property investors and property owners?
Any types of big road upgrades, tunnels and things like that.
So like the North Connects, which they've just built,
that would have had an effect.
The new M4 tunnel, that's crazy. That's cut out so much time. It's so good.
And it's creating more appeal to live in areas close to that area, because you're going to have access to that benefit. Big hospitals, anywhere where there's big hospital upgrades. That means there's population growth, but as well, the government's spending money to appeal for more people to go there.
What about airports?
Airports, yeah, out west. And in Brisbane as well, had a second airport. Shopping centres, any types of, like I said, Woolies, even McDonald's, they're not dumb. They do research of where people are going, where infrastructure is being built. So they'd probably even look at what the government's doing and go, okay, government's borrowing money to put $1 billion here. That means they're going to create a lot of demand for that area for people. We're going to put a McDonald's there. They're in the real estate business, McDonald's. People have probably looked at that.
Which is a domino effect, right? You've got the government spending all of this money somewhere, and then you've got the private sector spending it there as well. And then all of a sudden it becomes this much more attractive place to live. Like, for example, Southeast Queensland at the moment, the government is spending billions of dollars. And, you know, I think in a couple of weeks they're going to say whether they can get the Olympics or whatever it is.
Oh, yeah.
But, you know, not just the Olympics. There's going to be things happening, you know, outside of that. But Brisbane is a very, very interesting region at the moment because the government is pouring that much money into the place. The net migration is just in the positive. You know,
oh, you mean interstate?
Interstate migration is in the positive, and everybody's going there, and the government's like frantically trying to get all of this stuff done so they can basically house all of these people, which is great for property prices. It's going to go up.
It's going to attract even more people to go there because they're spending more money to build a bigger place for everyone.
Well, there's jobs. Right?
That's it.
There's activity, there's excitement. Like, I don't know, for our listeners who haven't been to Brisbane lately, like it's an amazing place to go. You know, the cost of living is a lot cheaper. You know, you can see all the restaurants are packed. You know what I mean? The cafes are packed. People have got money to spend. It's a mad vibe. And that's like during the week as well. It's a very, very exciting place to be. Whereas in Sydney, everyone's stressed out, everyone's swearing at each other, no one wants to be here, people are killing themselves.
Stuck
it's
in
really
traffic,
bad, right? So, you know, Queensland, especially Southeast Queensland, it offers a very, very attractive lifestyle because of the infrastructure that's going in.
They catered for the people, I think, up there. When I went up there to see some family, the place is just very, like the walkways across the river.
It's beautiful.
It's catered for people, not cars.
It's very nice. It's very nice. Get up there if you can. Number 6. This one's been a big one. It's been actually a very tough one for us to deal with in Luxland, and it's the cost of construction.
You experienced it just the other day.
You know, we're quoting clients on builds, and then 2 weeks later, if they haven't signed that contract, they're jacking the prices up, and it's not the builder's fault. Like, it's not like the builder is trying to make a bigger margin on you. It's just that the cost of raw materials, the cost of labour, it's all shooting up. Now, back before COVID, so pre-COVID, construction costs, like we do a lot of construction in Brisbane, right? So construction in Southeast Queensland generally moved at around 6 to 8% in inflation a year, right? And that's pretty healthy. It's a little bit more than New South Wales, but it's healthy, right? You can deal with it with the property growth and all of that sort of thing. You can sort of deal with that. But now it's like 20% more to build a place, sometimes 25%. I have people pulling out of build contracts because it's just too expensive.
So the cost,
which won't be expensive in, say, a year's time or 2 years' time because of inflation. It's just that the price, the dollar is being priced high, but it just means that we're getting less for our money.
Yeah, and over time that cost will be factored into the value. So you have to pay it now, but at the end of the day, in a year's time, those prices would have gone up again for the next round of inflation increase, which would then bump it up again. So you probably went up again as well.
It's funny you say that, Sam, because I had a conversation with one of our bankers yesterday, and I've been waiting on this valuation to come back on this construction build that we're doing. And I've been hammering them about this valuation because I've been nervous about it, because I'm like, I don't know if it's going to come up short or not. Now, the banker had a conversation with the valuer, and the valuer said, look, if it's land and construction, generally speaking, nothing's really come back short. Right? Even if the build contract is very expensive, it doesn't really come back short because this increase in build price is being felt on the back end in a positive way through the comparable sales. So don't stress. It's not going to come back short. So going back to it, an increase in construction costs is actually going to just push prices up. It's not like you're going to be at a loss. Yeah, it just means that property prices are going to go up because of the cost of replacement of that home, the bricks and mortar, the cement and everything that goes into it, right? It goes up in value.
And next year it's going to be more expensive to do the exact same thing. So that house will be worth $750, the new build, when yours might have been $700. So you've already, if you're a comparable house, you're going to have that increase with that inflation going forward as well. I had an interesting conversation with a colleague. He's doing a renovation in Sydney, and he said, just talking about construction costs, he within the time, he had to do a lot of DA stuff. It's a heritage, not heritage, but you can't change some of the facade. So he's had a lot of time to do all the approvals through council. It's taken a long time. And since, I think about 6 to 12 month time period through COVID, he's seen his estimated cost of the build go up 25%, purely based on the timber required to do the renovation. So there's a
timber shortage.
Timber shortage. One, because of the supply from overseas, and two, Australian producers can't keep up with demand. So that type of inflation on the resources is going to factor into his build. It's going to be more expensive to do renovations. That means those properties will go up in value over time because it's expensive to do.
And I've had this same conversation with a lot of my builders, and they're saying that they're going to have to switch to steel frames, you know, because lumber is just too expensive.
It's too expensive.
One last thing on construction costs, and the reason why it inflates, and something as simple as the cost of energy. Like, we all pay an Energy Australia bill or an electricity bill, and we all realise that every quarter or every year they tend to get more expensive. Energy is one of our most valuable commodities, right? And if it's costing us more in energy, something as simple as that, the cost of raw materials, the cost of labour and all of that sort of stuff is going to increase. So you need to understand why this construction is going up in price, which is then pushing prices up of property. And once you understand all of this, you kind of like, you start thinking, well, I better build as much as I can now while I can, because it's going to be...
While it's as cheap as it is.
Well, yeah, it's always going to go up. So a lot of people are whinging and complaining right now. They're bitching and moaning about the prices of property. What's going to happen in 20 years' time? It's just going to be more expensive.
100%.
I mean, I'm pretty sure our parents bitched and moaned about it about 30 years ago. They're not bitching and moaning about it now, are they? True. Number 7.
Land tax and council rates, which is an interesting one. So really, at the end of the day, the states will get a lot of their income through the imposition of land tax on land and council rates paid by homeowners. So it's all levied on the land value. So
and this is every property.
Every property.
Every property incurs it.
Every property. So unless it's your PPR for land tax, you get some
But
concessions.
there's still council rates there.
There's still council rates. So really, at the end of the day, the state governments that collect this revenue have an actual vested interest in your property going up, because they'll make more money off you. And it goes back to the infrastructure where we talked about federal governments as well, but state governments, they'll borrow money, they'll inflate away debt in a bid to then build infrastructure to create higher land values, more demand in those areas, that will then in turn give them a greater land tax payment from you and council rates. So there's a bit of a game going on there, I think, when people look at it.
You've got to think about it, and a lot of people don't think about it. And it's really interesting, because when we started thinking about the land tax, we started digging a lot deeper into it, right? And we're thinking, yeah, you're right. Like, the land, it is no use to the government if land values decline, right? Because their income stream then declines. So when you think about it, land is always going to appreciate in value, because not just because of the scarcity component to it, but more so because the government needs it to increase in value for their income stream.
Yep. And another quick point about that is, do you remember what they were going to do with stamp duty?
Yes, they're going to abolish it.
And what were they going to do?
Introduce some sort of increased land tax.
Increased land tax. And so what they're going to do...
But they're going to be worse off can't remember. We'd done the calculation, and I think they were people were going to be actually worse off. It was a facade to make the government look like they were doing us a favour, but in actual fact, they were going to make more money.
Yeah, because at the end of the day, it might stop transactions, or I don't think it will, but it will actually increase transactions.
Where are we at with that policy? Is it still up in the air? I don't think it will happen.
But at the end, if they do that, just say they remove stamp duty, that means they're relying on less revenue, and more burden is upon the land tax revenue. So they have even more vested interest in making the land values go up.
That's right.
Do you know what I mean? So
That's
I
right.
don't know how they're going to do that, but it means they need more revenue from what they already have.
Buy land.
Buy land.
Buy land and wait, rather than wait and buy land. We've touched on this number 8, gentrification.
We can go for it.
So we'll talk about what gentrification is. It's usually a really good example of gentrification is Redfern. Like Redfern right now is a very premium suburb of Sydney. Like you're looking at houses in the millions of dollars.
Yeah.
But 20, 30 years ago, you wouldn't go down Redfern, you know what I mean? You'd probably get bashed and mugged, right? But now, right, you can go to a really good restaurant. I actually drove through it the other day because I live not too far from Redfern, and it is pretty cool.
Yeah.
It's bustling, there's a lot of life, there's some cool cafes and restaurants. Like it would be, like I don't live next door to Redfern, but I'm not too far from there. But it'd be pretty cool to live in Redfern now.
Yeah.
Now, that's a really good example of gentrification. A lower socioeconomic suburb that has been, geographically quite well located, and people have realised that there's an affordability component there. They've flocked there. The aspirationals have flocked there, and they've pushed the prices up of those properties.
Well, people go on there, the government will spend more money there, and it's like a domino effect, and then that location is now a premium location.
Well, I think where we grew up on the Central Coast, Carry-On, right? That was a shit suburb, like back in the day, right? Nothing against our parents who bought
like the
in the area.
Redfern of Central Coast.
Yeah, like it was the ghetto. But now you've got properties in excess of $1 million, right? And it's actually a very premium place to live if you live on the Central Coast because of its access to the freeway. So geographically it worked, right? So this is where you need to look at suburbs and go, okay, will it work? Because a lot of people can't envision where that suburb's going to go. They can't envision where gentrification will occur. Is it next door to a suburb that's quite affluent, and meaning that those people in that affluent location can no longer afford to live there, and they have to now go one suburb out, which it might be in a bad suburb, but then may turn into a really, really nice suburb.
Another Redfern. I'll turn into another Redfern.
That's right.
I had do you know that building next to the Harbour Bridge in the Rocks? It's called the Sirius Building.
Yes.
It's a brutalist.
Yes.
Have you heard the latest about that?
They're going to do some big development there.
Yeah, there's some activity there. So that's a housing commission building.
Yeah, former housing commission.
There's a lot of buildings like that in Redfern as well, in a city where they were in bad locations. I don't know how the Rocks was a bad location, but
it's a pretty nice location.
They put a housing commission building there in a less desirable location, a more affordable spot to park people. And what's happened since then, it's in such a good spot now. Guess how much? So they were going to redevelop it. I don't think they're doing it now. They're selling it as is, but like apartments, like it's just a normal real estate sale. Guess how much one of the penthouses went for?
How much?
35 million.
Oh, wow. Wow.
35 million.
Great example. That's actually a very extreme example. A very extreme example. And I guess, that 35 million penthouse probably won't cash flow for us to be able to hold it. So it's priced us all out.
But it's a good example of gentrification. That place wasn't desirable. They put people that couldn't afford to live in that area in the housing commission building.
They're selling those off the plan now, are they?
Sort of thing, yeah.
Yeah, right. I wonder how much like a 1 or a 2 bedroom would be in that development.
Apparently it's a lot of people like it because of the architecture. So it's got.
You know why I would like it? Because I like pancakes.
Is that below?
Pancakes on the rocks. What's number 9?
Interest rates.
Interest rates are at record lows at the moment, and they basically dictate, price growth. We have progressively had interest rates just drop from. We've talked about it in previous podcasts. Our parents would have borrowed at 17-18%, and now they're at record lows of below 2%. will we see an interest rate rise? Potentially, right? Like it will happen, but will we see it shoot up to 10%, 15%? I don't think so. Like that will put people into a lot of trouble. But realistically speaking, to cool the market right now, because it is, it's off its head, the RBA will probably need to, incrementally increase the interest rate. But let's say the interest rate's double, which goes from 2% to 4%. It's still pretty low.
Yeah, very low compared to what we've seen. And I think what people have to take away from that is that it's not a bad thing if rates go up. It means
asset prices have increased.
So they're trying to slow growth. So the reason they drop rates, economically speaking, is to create activity. So
which they have.
People are going crazy, buying property, price is going to go up. It's done its job. They're going to bring up the rate slowly because things are getting better. And then they want to stabilise the prices. And then there'll be a stage where they drop again for whatever reasons in the economy, and then there'll be another growth in demand.
So let's talk about why they dropped them in the first place. So it's not all about just property prices. It's just we can call it a knock-on effect, right? Yeah. But the reason why they've dropped it is because they wanted to produce this thing called the wealth effect.
Yeah.
What's the wealth effect, Sam?
Wealth effect is when through the interest rate, your costs go down, and also your asset price will go up in value, making you feel like you are wealthier. You're probably making the same money. Nothing much has happened in the neighbourhood, but on the news and in the newspapers, sentiment. You're feeling like, okay, well, next door neighbour sold for $1 million. My property's worth $1 million now. I'm going to go and buy a motorbike.
I don't like the wealth effect. I actually hate the wealth effect.
In capitalism, it has to happen.
Because with the wealth effect, what happens is you end up spending money on stupid shit.
True.
Right? I love the broke effect. The broke effect forces you to save money, right? It forces you to go out and make money. It forces you to be frugal, right? But the wealth effect drives property prices up. Whether I like it or you don't. It doesn't make a difference, right? The government wants people to feel wealthy, so they spend more money. They spend more money on things like property, which pushes prices up.
And at the end of the day, we're in a pandemic where the economy got hammered, so they want people to spend money on consumables too. So it's not just property, they want people to buy motorbikes, they want people to buy stuff to create economic activity.
So number 10 is the reason why property goes up is because companies like Luxland are recommending them. And that's, it's not really a reason, but it's all of our clients make money from their properties, whether it's through cash flow or capital growth, or it could be from the tax deductions that they get. So we really, really believe in making money from property.
There's a reason you have a business revolving around it. It does what it says it does.
And I don't like to just rely on markets. I really do like to rely on our strategies and also manufacturing that profit through maybe a timeline strategy or maybe through a development or something like that. And what I really love about property, Sam, is that it's predictable.
Yeah.
We're involved in multiple businesses and there's so many unknowns, there's so many uncertainties. But when it comes to property, you can do a feasibility study on it, you can track the growth, and generally speaking, even if you don't get any growth, but you can manufacture that predictable outcome, I think that's just a beautiful business model.
Business and shares are volatile. Property is not very volatile. So you can sleep at night a lot easier, right? Would you sleep easier at night with all your property portfolio?
Opposed to crypto?
Or just your business operations. It's sort of a given.
Well, you know you're going to make money in your sleep, not only through appreciation, but it's cash flowing, it's looking after itself. Even with interest rate rises, we can handle what we're holding because we make sure we have buffers in place. Our cash flow is quite strong, so we can weather the storm. And the storm doesn't last forever. The sun comes out after the rain all the time.
Indeed.
So look, guys, that's 10 reasons why property always goes up in value. Thanks so much, Sam.
No worries. I'm going to go buy another property.
Yeah. So, if now's the time. Interest rates are low. If you can lock in construction prices, if you're going to do, a brand new build, lock in construction prices at today's rates. Yeah. Even if you're not going to build till 12 months down the track, at least you get today's rates. in a contract, you're going to really sort of win in the future.
Good wisdom. Very good wisdom.
All right, guys, that's it for another one. Until next time, peace out.
See you.